The first cost that I would like to discuss is estate duty. So when a person passes away, estate duty is calculated on the dutiable estate of the deceased, and 20% is taxed from an estate duty perspective. On the amount above 30 million, 25% is estate duty tax. But it's important here to understand that it depends on the structure in your will, because the portion left to the surviving spouse is exempt from estate duty in terms of Section 4Q of the Act. And then there's also a primary abatement of 3.5 million. So you will only pay estate duty on the amount above 3.5 million to the extent that it's not left to the surviving spouse. So make sure you understand, it becomes a bit technical, but it depends on the structure of your will, the estate duty implications which would be payable. Another tax is capital gains tax. So on the date of your death, there's a deemed disposal of your assets at market value. So depending on what the base cost of your assets would be, the capital gain can be calculated. And then the capital gains tax will be calculated depending on the income tax scale of the deceased prior to his or her death. Another cost implication is executor's remuneration. So that's 3.5% plus VAT on the gross value of the estate, and also 6% plus VAT on the income earned in the estate after the date of death. So make sure that you agree with your executor what the executor's fees would be that the executor would charge after your demise. Another cost implication is transfer fees. If there's immovable property, a conveyancer must be appointed to transfer the property to the beneficiary mentioned in the will. Fortunately, there isn't any transfer duty payable, but the attorney's fees must be paid to transfer the property to the beneficiary. Then there's a couple of minor expenses like master fees, bank charges, and it might also be a requirement that certain assets must be valued. So an appraiser cost would have to be paid, and also some funeral costs. But what is very important is that you need to do the calculations, of course, before you die, to establish exactly what is the expenses, what is the taxes, and what are the liabilities. Because then you can ascertain the liquidity of your estate when you pass away. Do you have sufficient funds to cover all the cost implications and all the liabilities? Because if there's a cash shortfall, then your executor might have to sell certain assets to cover up that cash shortfall. And you can also supplement the cash shortfall with a life policy.